Welcome to TheMBI.com. This is John's report. It's for the 15th of June. Well, we got a little bit of bounce back continuation, and no surprise within these readings. We're starting to get a slowdown in the rate, and of course now minus 22 on DOC and that. So we're reaching that point where usually we get some kind of Bayesian attempt to create a little punch. You can see that minus 21% is from, I'll have to shrink it just a little bit here, the beginning of the year, going all the way back to there. So it gives you an idea of the significance of what's taking place, despite all of the warnings. This all could have been, I don't know if avoided is the correct term, but just probably mitigated to some degree with some policy change, but I don't think that was ever the desire. So I think this is exactly what they've been looking for. And it's, I guess what you could call a controlled deflation of the asset bubble. So from that standpoint, if they're able to maintain growth to some level, though there's a lot of talk that recession in certain areas definitely has already begun. It's just a question of whether it's complete throughout. From a DOC standpoint, you can see NQ looking identical with the white leading, and both magenta and yellow still falling. Same situation with the red DOC and green, although they're at what we would consider typical pivot points, so we wouldn't be surprised to have to push back up. But quite a range, though, back up to the 23%. So I usually look for the 0% here as the key. You've got to close above that previous zero to build any momentum. So that would be the first range to look for, both on the S&P as well as on the NASDAQ. From a Euro standpoint, doing whatever they can to try and salvage this down at these levels. Nothing has changed as far as the Eurozone or what it's doing. But this is sort of one of those adjuncts to what's happening in Japan as far as, I guess you would call it the peeling of the onion from this whole idea of creating sanctions. It's clear some people don't read their history. Napoleon tried this back in the 1800s when he demanded that no one trade with Britain, and all of his Confederate states got together that he had aligned, and nobody was trading with Britain, and it didn't work because there was go-arounds and all sorts of other things, and it ultimately led to catastrophic conditions for the Napoleon side. You're seeing the replay for the West almost identical at this particular stage. So it's one of those where those who don't understand their history are doomed to repeat it. Gold isn't really going anywhere at this particular stage, good, because there's the half the crowd that believes that things that are taking place are deflationary with recessionary pressures that will ultimately drive prices lower. There's still a crowd that thinks that gold should be significantly higher, but again, a lot of it's traded like the cryptocurrencies that have futures contracts and that easily manipulated setups. What you can't stop is this one, which is the global market for oil, and that is pretty much dictating the inflationary pressures that exist. There really is no reduction at this particular stage. So the other thing you can do is really kill demand, but killing demand is having economies not just suffer, but really contract. So I'm not sure why that would be the plan. It seems relatively unnecessary. We talked about this one as well as TLT treasuries. Yield continuing to climb, and this is just going to make things worse in housing and everything else, as interest rates are just going to have to continue to accelerate to both keep up with the realities of inflation, as well as the Fed being pretty determined, it seems, to have the appearance of tightening without actually having to go too far. Because if they continue to raise rates as they suggest they will, with 50 or 75 point increases, deficits for the U.S. would be staggering, just huge. It's that interest on the debt would just be staggering, actually. Bitcoin trying to base down here and holding that 20K level of breaks, that psychological level. I think there's going to be even more carnage to come. You got Magenta leading, so it's just enough to get it going. You've got Steel rising, Orange dropping at this particular stage. So all the things are set up for a little bit of a rally coming back. This is from 60-minute. Put up a daily of it. And there would be the daily sell all the way back up from April. It's been a sell, and not much has changed all the way through here. So not too surprising from those from an ETH standpoint. Again, fairly nice the way it trades, and a lot of good bounces, but ultimately towards the end of the day, it just continues to sell off and then tries to build its case back up to, in this case, we're looking to go back up to the previous lows, which would be right around the 1158, but also another critical one, a break of the 1000 would be one of those psychological barriers. The decay standpoint has been pretty much weakness throughout. Starting to build a little bit of strength momentum here with a little pivot up with Magenta leading. So that's providing some basis, but coming off of where we were, you would have expected a bit more of a move to the upside to really test the strength of it, but there just doesn't seem to be that many interested buyers at this particular stage. So when we get these positive extremes, they're filling pretty darn quick and pretty clean on those setups, even when the little mini runs start with doing those under positive extremes, which fill back as well. So it's just a matter of waiting for that Magenta pivot back under yellow, or at the same time the Magenta pivoting lower with the white spike of the MBI usually is enough to generate some softness going through there. This one kind of what we're seeing over here, where it pops up above and doesn't quite get below that 25. What I look for is when that Magenta pivots, that it just continues to head down towards reset levels, like this setup right here, where it's just perfect. It just breaks down below, point starts to rise from the bottom. It corresponds with DOC spread. Even if you wait a little bit longer, which I don't really think is necessary because it's already waited an extra bar after dipping below the 33. Beautiful return setup, and it fills all those positive extremes that took place on the run. Once that one took place, though, we ended up with more selling, which literally wiped out the push that had taken place prior to the market. But again, we talked about this, that we were likely to come back and retrace those when we were looking at the low range, a little bit higher at 3710 than the previous day. So that's not bad from that standpoint. You can see in post-market right here, we've got just a little bit of lift back up right around this 3750, so that becomes the general range at this particular stage. So there you have it. That's the long and the short of it. And as we approach the middle of the week, we'll keep plugging away at it, but there's a lot of issues as far as where direction goes based on what some of the economic readings are going to be. And so I think that's going to be a close eye out to see how things are performing given the stresses that the economy is clearly facing with inflationary price increases. You can look for me on the Skype chat. I'll put up any relevant charts as they pop up. Trade well. Talk to you later.